What's going on, everybody, and welcome back to the channel. In today's video, I want to talk about how to trade news events. The reason is that every week it seems like we have some crazy news. Now, in this week, we both have the CPI report, which will be tomorrow, and I will show you guys my main strategy when I trade that, and we also have FOMC. But these strategies can really be used for almost any news events. Now, I discourage people trading through the news. All these strategies will be after pretty much news plays out. So news plays out and then it shows certain technical indicators that I look for to take certain trades. Now again, this is going to be quite risky because you never know exactly how the news is going to play out, but I have developed strategies that have been right a lot more often than wrong. I'm going to say my win percent on trading news is about 80% or more. Now, I do not trade every single news event. I do not trade the ER events, for example. These are mostly going to be the big news events, right? Like FOMC and those sort of things, not ER, because ER earnings reports, you cannot really trade because they happen after hours or before the market opens. So if you enter a position, you're going to have to guess right before, and then, you just kind of, the likelihood of chance that the price action is going to happen, and it's just going to fall whatever falls when the market opens, and then you can sell. Again, these are going to be secret strategies that I don't really have shared, so make sure you hit the follow button, hit the subscribe button, hit the like button. Let me know in the comments down below what else do you want to see. I have a strategy that I've been using the last few weeks, which I might share. I'm definitely going to be sharing my private Discord. I don't know if I'll be coming out to the public with that strategy just yet, or it won't be for a little while. But if you want to join the Discord, I'll have a 20% off coupon. Secret coupon, don't tell anybody, it will be down in the link below. Only 5 will also get that, come through in live every single day. Okay guys, so let's quickly go over sort of the news event and the dates that it happened. So here we start with the first example. This is going to be on April 12th. This was the day that we had a CPI report. If you trade with me live in our Discord, you remember us trading this exact day. So I like to usually trade on the 30-minute charts when I'm trading these past news events. With this news events, you have to understand that the market will open after this news. So the CPI is around 8:30, 9 a.m. and then it opens at 9:30. So we'll have two 30-minute candles playing out. So I like to take the first 30-minute candle, right? I played out. So the 9 to 9:30 candle. And what I like to do is I take my horizontal line and I will draw 3 levels, 1, 2, and the third will be right in the middle. So it'll be 1, 2, 3. And then the way I like to trade this, and I like to take them from the very top to the very bottom, and with the wicks included. And then the way I like to trade this is if you open up below the top one, so in this case will be down here, I'm gonna be shorting it to the middle one and then hopefully to the second one. As you guys can see, that would have looked something like this. So the market would have opened right around the pretty wicked, I think. If I remember this day correctly, open right around up here. So we have a stop loss right above here with the profit target down here. Well, 1 to 2.75 risk reward. Pretty nice trade, right? Pretty good trade, especially if you got in a really, really nice entry. And you can see it totally played out. And then if you left runners, it just kept going lower. And if you time the bottom, it'll be almost a 1% risk reward, and then even came back up and reject it. So why does this happen? A lot of people ask me, like, why is this the way you trade news? Well, the reason is actually very simple. The liquidity that is created through this news events. This liquidity right here, if it does not get taken out, right? If it just taps it, but doesn't close above it, which will be the above the high, will come back down and will hit the low sides. Now, if the low sides, right? If the low side liquidity, if this does not opens above it, if the market opens above this and does not touch it, it's going to hit the top side. That's essentially what the plan is and what the trades are behind. It's kind of an interesting perspective. It's an interesting idea, but I promise you guys it works very often. And this middle part is really important as well. This middle part is going to say acts to a resistance in the future, but the middle part is kind of halfway point between tipping it bullish or bearish per se. Now, if a candle closes below this middle line, so let's say this 30-minute candle right here, which it did, would have closed it like, imagine it would have closed just slightly below this. I would have taken a short position with a stop loss from here above that, whatever the previous high would have been, which would have been probably right here to this level or lower. So that's the way I like to play it. So if we were to imagine, right, because I can go over through all the news events, which it works. So it takes 3 lines here. So imagine you have your candle right here, you draw your 3 lines. Imagine this one's more in the middle. You fix it up real quick. If the next candle opens up below this, I'm going to short this to here. If this closes above here, above this, if the 30-minute candle, next 30-minute candle, then you short it here to profits, good to go. The 30-minute candle closes above this, I will long this to here, and then potentially up here. Does it make sense? Now, if you hit here and it closes below the next 30 minute candle closes below, you're shorting it back to here. And now you're just playing this level. Like if it closes above, now you long it to here. And that's how the levels are played. That's how I like to play the level. It's all based off that 30-minute candle the news comes in. Let's say to focus on which 30-minute candle the news comes in for the CPI events. Now, what if, it's probably going to be a question, what if you get the candle and you open up either above or below? If you open up above this, let's say the candle goes here, you're going to long this with a stop loss below here. You're going to long this, right? You don't want to see when something is strong towards the direction, you don't want to see it to come down to retest the liquidity levels that will be down here. Do you get that? That's why we're holding above this level. So if we hold above this level, we want to tap this before we come down to test these levels. Will this work 100% of the times? It will not, but it works about 80 to maybe even higher % of the times if you're very accurate with the strategy. And if you guys know, if you guys trade CPI with me, the CPI strategy, yeah, we do really well on CPI days. CPI days have been somewhat better days that we've had. A lot to do is with the strategy that I do not see a lot of other people talk about. I don't see a lot of other people copy, trade, and anything of the sort. But this is a CPI strategy. Now let me give you guys the FOMC strategy that I like to use. So here we are, May 2nd. This is the FOMC day. As you can tell that with FOMC day, it's going to be a little bit different. I like to call it the inverse strategy. Super confusing, but what I like to do is believe the first move. So if the first candle is red, that to me is going to be where more than likely the market will end up. So you guys can see this candle close a little bit red. At the end of the day, I think the market will probably end up on the lower side versus above that candle. So what I like to do is I'll take that candle, mark the top side, and mark the bottom side as well, so that I'm aware where I expect the market will close. But now what I call it the inverse, because you have to inverse that first candle. So let's say you finish red, then you actually, if the candle finishes, you take it long. You take it long with a stop loss below that candle. So for example, here, it'll look something like this. This candle opens up, stop loss. Remember guys, candle close, and then you take it to the very top, if whatever that candle formed, or if you have a next level of resistance here, for example, if I had a little bit of a demand level here, just order block around this level, this fair value gap, whatever you're gonna call it, you hit that fair value gap on this big downtrend, you reverse, and that kind of would have been. And then I call it the inverse, because now you're gonna have to inverse that move. I get it. Super confused. It's gonna take you guys practice because you know I get this first time. So first move, you inverse that move, second move, and then remember I told you the first candle is gonna be the right candle by the end of the day. That's the third move. So that's why you inverse the inverse. So you take the first inverse of that. So you don't trade the first move. The first move is just to see where the price is gonna go. That's why I tell you guys that yes, it's a news event, but I'm trading the price action kind of after the news, right? A lot of times, J-Power might still be talking about the second move. If you don't feel comfortable, you don't understand it, just sit back and watch, let him finish talking, and then just take advantage of the third move if you see an opportunity there. Now, with the second move, take advantage of this, and then the third move will be in the end, will be the third move of inversing the second move. You get it? So it goes first move, inverse, and then inverse the inverse. So then second, I guess, inverse. So then you go back to whatever the first direction was. So it's usually will go boom, 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 right? Or something like that, or it'll go boom, boom, boom. Kind of like a 3-step count, kinds of Fibonacci. This one's it's confusing, but that's how I like to trade it, right? And you have to be extremely careful when you're trading all these news events, guys. It's not very beginner friendly, but all beginners ask me. I recommend that you guys trade this type of stuff. Really, it's good to know. It's good to take a lot of position sizes, small position sizes. This should not be like, this is when I get rich. This is how my trading is built around. This strategy that I use that made me a good amount of money and profitable trading news, but it is not like, do I need this news event? I need to focus on news. I do not, and I don't recommend really anybody to focus around this. Learn it and put it in your kind of like repertoire. And it's good to know. And if you do want to trade it, I want you to trade it safely. I don't want you to trade it just, randomly. And it's very important to wait for those kind of closes, guys. And it will not be easy. Like, look at this move. This is a huge move on this green candle, this red candle, before the market even, the 5-minute candle even close or open. So it's extremely volatile, especially if you're taking 0 days. It's extremely, extremely volatile and dangerous. So I'm just warning you guys. I made this video so you guys can learn. I also want to warn you guys. As always, if you find value, if you want to trade with me live every single day, the link will be down below. As always, peace.